Welcome to the Financial Quarterback with your host, Jim Lineweaver.
I'm Jim Lineweaver, your financial quarterback since 1993. I'm here with Justin Weseloh. He's a realtor with Keller Williams team. And thanks for coming back to bring us up to speed on not only the local, but also the national real estate markets, not only for 2020, but also the outlook for 2021.
Thanks, Jim. When I was on last year, we had a particularly tight market and not much has changed. While a lot of our economy has seen damage from the fallout of COVID-19, fortunately, our real estate market, both locally and nationally, has been spared.
So really, I guess the trends are continuing and inventory is still pretty low.
Yeah, in fact, during 2020, inventory levels continued to decrease. Year over year, there were 50% less homes at the end of 2020 compared to 2019.
Wow, and for those that were on sale, how quickly did they turn over?
So homes that were on the market in 2020, over 40% of them sold in just 2 weeks, compared to only 20% of homes selling that quickly in 19.
So I'd imagine if the markets are still tight with inventory low, that means prices are going to continue to rise, correct?
Yeah, our values are soaring in most of our communities. There have been some appraisal challenges as our lenders and appraisers attempt to maintain a healthy appreciation rate while controlling significant value spikes that will inevitably cause a bubble to burst. I don't think any of us want to go back to 2008 or 2009.
No, definitely not. Not only in the real estate market, but also in the stock market. So when it comes to pricing and given the tight markets and soaring prices, what are you seeing in terms of listing prices and negotiations?
Sellers are definitely changing their strategies in a few key ways. In years past, Northeast Ohio homes go on the market with an objective list price. That means the negotiations often started 10 to 15% below full price. Today, our pricing structure has taken on a much more complex strategy, like other parts of the country. List prices are usually a starting point for negotiations, and sellers are pricing homes to create scarcity around inventory. And that result is that buyers are offering significantly more than list price to secure the home. Not only are they offering more money, they're waiving home inspections, bridging appraisal gaps, and even covering seller closing costs like commission.
Wow, so it looks like a great time to sell, but the flip side is that you usually need to buy something after you sell your home. It sounds like it isn't such a great time for buyers.
Well, I think not all buyers, including investors, have to be cautious. Home values are continuing to increase. Margins are continuing to decrease with the rising cost of lumber and other construction materials. Investors should look out for short sales and foreclosures as future opportunities. We've not had a large number of them in our area and across the country, but as the economy begins to rebound after COVID forbearances, they will become investor opportunities. It's a good idea to be a student of the market that you're in and know your numbers.
Thanks, Justin. You always give us some great information and we appreciate your insight. So if you need someone to help you sell your home or buy a new one, give Justin a call. If you want to know how to take advantage of real estate in your portfolio, give us a call. Stay tuned for Chris Wolf.